Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today, we're diving into a Form 8K filing from Verrica Pharmaceuticals. Trust me, it's more interesting than it sounds, especially if you're into companies asking for permission to keep operating. So, what's this report about? Verrica Pharmaceuticals needed to get a special permission slip from its lenders. Why? Because there's a chance their financial statements might raise concerns about the company's ability to continue as a going concern. In simpler words, there's a risk the company might not be able to stay in business. This whole thing went down around February of 2025. That's when Verrica made a deal with its lenders, which is why they had to file this report with the Securities and Exchange Commission, or SEC. Let's back up and see who Verrica Pharmaceuticals is. Verrica is a company focusing on skin disease treatments. Now let's dig into the details of what happened. The main event here is that Verrica entered into something called a waiver. Think of a waiver like a get-out-of-jail-free card, but for financial rules. Verrica basically asked its lenders to ignore a couple of rules in their existing loan agreement. This loan agreement, officially called the credit agreement, dates back to the summer of 2023. The lender is OrbiMed Royalty and Credit Opportunities IV, LP, along with any other lenders who might be involved. OrbiMed is also the administrative agent, acting as a go-between for the lenders and Verrica. So what rules did Verrica need to be waived? Basically, the lenders agreed to ignore requirements that there not be any doubts about Verrica's ability to operate. More specifically, the loan agreement said Verrica can't have any going concern warnings on its financial reports for the year ended December of 2024 and the quarter ending March of 2025. A going concern qualification basically means the auditors are worried Verrica might not be able to stay in business. The lenders waived that requirement. Good news is that everything else in the original loan agreement stays the same, only those requirements being waived. If you're interested in seeing the full waiver, Verrica plans to include it as an exhibit to their annual report, which you can find as a Form 10K now. Let's step back and look at what this all really means for Verrica. On the one hand, getting this waiver is good news. It means the company has bought itself some breathing room. It shows that their lenders believe in them enough to bend the rules a little. Without this waiver, Verrica could have been in serious trouble if its auditors raised concerns about its ability to continue. However, let's be real, needing a waiver like this isn't exactly a sign of financial strength. It suggests that Verrica is facing some real challenges and that there are legitimate questions about its long-term survival. It could be due to a lot of factors, such as slow sales of their products, high costs of research and development, or maybe they are just having trouble managing their cash. What are the key risks? First, there's the risk that Verrica's financial situation doesn't improve. If they can't boost sales, cut costs, or find new sources of funding, they could still face serious problems down the road. Second, there's the risk that even with this waiver, Verrica could run into trouble with its lenders. If they violate other terms of the loan agreement, OrbiMed could still pull the plug. Verrica is fighting an uphill battle. So what does this mean for Verrica's stock price? That's a really tough question. On the one hand, the waiver could give the stock a short-term boost as it removes some of the immediate uncertainty. However, the underlying problems haven't gone away, and investors may be hesitant to buy into a company that's facing such significant financial challenges. From a valuation perspective, it's difficult to put a precise number on Verrica's stock. The company isn't currently profitable, and it's unclear when or if it will be. Traditional metrics like price-to-earnings ratios don't really apply here. Taking everything into account, here's my view on Verrica Pharmaceuticals. I'm leaning bearish. While the waiver provides a temporary reprieve, the underlying financial challenges are significant. I'd say a reasonable price range would be between $1 and $2, reflecting the high degree of risk and uncertainty surrounding the company's future. Thanks for watching. If you found this breakdown helpful, please subscribe to Corporate Decoder for more plain English explanations of complex financial filings.